Good morning, or good afternoon, rather. My name is Kieran Tester. I'm the chair of the Standing Committee on Public Accounts. And I'll remind all members and everyone watching that this is the committee responsible for reviewing the Auditor General's performance audits of GNWT entities and programs. And at this meeting, the Auditor General's financial audits of the GNWT public accounts. Our role as a committee is to review in a nonpartisan manner how public funds are spent and how government programs are administered. We are here to assess the impacts of government policies, not their political merits. The purpose of today's meeting is the public review of the 2024-2025 public accounts. The committee is joined by David Irving, Principal of the Office of the Auditor General, and Julie Mujcin, Comptroller General, and their staff, who will be introduced in their opening remarks. I'll remind the committee that this meeting is being live streamed and to direct all questions through me as the chair, and wait for your microphone to be turned on before you're speaking. It's hands-free, you don't have to touch anything. So now I'll ask members to introduce themselves for the record, and we'll start with Mr. McNeely.
Thank you. Good afternoon. Welcome to the committee. My name is Danny McNeely, and I'm the MLA for the Satu region.
Thank you, Mr. Chair. My name is Danny Rogers. I'm the MLA for Inuvik Boot Lake. Welcome.
And then we'll go to Minister Kaptana online.
Yeah. Good afternoon. Lucy Kaptana, MLA for the Nunavut riding, also Minister responsible for Housing NWT, and Minister responsible for the Status of Women.
Mr. Morris.
Thank you, Mr. Chair. Julian Morse, MLA, Frame Lake.
Ms. Reed.
Thank you, Mr. Chair. Kate Reed, MLA for Great Slave.
Wonderful. So that covers the players, and now we'll begin with the show. We'll start with the opening remarks from Principal Irving. You have the floor.
Thank you, Mr. Chair, and thank you for the opportunity to discuss our audit of the consolidated financial statements of the Government of the Northwest Territories for the 2024-25 year. I express my gratitude and respect to all Indigenous people who have contributed to shaping and safeguarding the beautiful lands they call home throughout the Northwest Territories and Canada. I am accompanied by Andrew Ross, the Director who led the audit team. As the Government of Northwest Territories' independent financial auditor, our responsibility is to audit the government's consolidated financial statements and express an opinion on them. As legislative auditors, we also audit and report on the government's compliance with specified authorities. The Government of the Northwest Territories' public accounts, which includes the consolidated financial statements, is a key accountability document that can help the Legislative Assembly members understand the results of the government's financial transactions. Therefore, our audit of the consolidated financial statements supports the Legislative Assembly's oversight of the government, promotes transparency, and encourages good financial management. The committee's review of the public accounts is an important step in ensuring accountability for how public funds are spent and how government finances are reported. The government carries out its accounting and financial reporting responsibilities through the Office of the Comptroller General within the Department of Finance. The Comptroller General will answer questions about the financial statements. We will focus on the results of our audit work. Our independent auditor's report is found on pages 11 to 14 of Section 1 of the Government of Northwest Territories Public Accounts. We have issued an unmodified audit opinion on the consolidated financial statements, which means that they conform in all material respects with the Canadian Public Sector Accounting Standards. This attests that you can rely on the information provided in these statements. We also provide an unmodified opinion that all the transactions that came to our notice during the audit have complied with the government's specified authorities. However, we do want to highlight one area to improve internal controls. Best practices for good financial management controls is for appropriations to be approved before the end of the year and for departments to ensure their expenditures do not exceed their appropriations. This year, 4 departments exceeded their approved budgets. Additional funding exceeding $41 million was authorized after year-end. Now, the current process of approving amounts after year-end remains compliant with existing legislation. However, we recommend that the government enhance its budget processes to ensure appropriations are reviewed and approved before the fiscal year end. I would like to thank the Comptroller General, the Assistant Comptroller General, the Deputy Minister of Finance, and the staff of the departments and agencies who are involved in preparing the government's consolidated financial statements. Mr. Chair, this concludes my opening statement. We would be pleased to answer any questions the committee may have. Thank you.
Thank you, Mr. Irving. Ms. Mujcin, you may begin with your opening remarks.
Good afternoon, and thank you for inviting us before committee to discuss the 2024-25 Consolidated Public Accounts of the Government of the Northwest Territories. With me today from the Department of Finance is Mr. Celestino O, Assistant Comptroller General. Today I'm here to speak to the public accounts. These documents present the consolidated financial position and the consolidated results of operations of the government reporting entity for the fiscal year. They provide important information on the government's current financial position, how the government spent its money in the previous year, and how that spend compared to its original budget. These financial statements are a key accountability and transparency reporting mechanism of the GNWT. The consolidated public accounts are audited by the Office of the Auditor General of Canada, and the independent auditor's report again this year provides an unmodified or clean audit opinion. In terms of the financial highlights, the 2025 Consolidated Public Accounts reports that revenues were $3.1 billion and expenses were $3 billion, with an operating surplus of $46.3 million. During the year, the GNWT invested $303.2 million into capital infrastructure. Net debt increased by $93.5 million, bringing the total to $1.8 billion, and the overall borrowing sits at $1.7 billion. Unlike the previous few years, we did not have to implement a new accounting standard in 2024-25. Nonetheless, each year we are faced with a number of complex transactions or issues that require time and research to ensure they are appropriately accounted. At the same time, we continue the work to implement new accounting standards already approved for future years and finding efficiencies and making general improvements overall. There are many teams across the government reporting entity that are involved in the year-end process. I would like to acknowledge them for their contributions to the on-time completion of these consolidated financial statements. And further, I'd like to acknowledge the work of the Office of the Auditor General of Canada and the professionalism and dedication they bring to the audit. And that concludes my opening remarks. Thank you.
Thank you, Ms. Mujcin. We'll now turn to committee for questions of our witnesses. We'll start with Mr. Rogers.
Thank you, Mr. Chair. Mr. Chair, the committee notes that there were 4 departments that were the Comptroller General has deemed to have excess amounts as appropriations under Section 77 of the FAA. For context, Mr. Chair, the voted items that were overexpended in the current year, Department of Finance Operations was $8.1 million, Department of Health and Social Services $5.5, Department of Legislative Assembly $180, and Statutory Offices Operations Department of MACA $6,000. In addition to the deemed appropriations above, in October 2025, the Legislative Assembly approved supplementary estimates, operations expenditures, and borrowing authorization number 3, in which the Department of Health and Social Services was approved at $27,512,000. In addition, an authorizations for fiscal year ending in March 2025. So can the Comptroller General, Mr. Chair, provide more details on what the $41 million covered? Thank you.
Ms. Mujcin.
Thank you, Mr. Chair. In note 26 of section 1, we have, excuse me, an overexpenditure note that details the 4 departments that had deemed appropriations for the fiscal year. Starting with the Department of Finance, the majority of this amount was a result of a tobacco settlement that resulted in legal fees that were unknown prior to the supplementary cutoff period. As well, there were some payroll liabilities and environmental liability adjustments that commonly occur at the year end. And while departments do their very best to forecast, sometimes items come in late in the fiscal year and are unable to meet a supplementary appropriation deadline. With Health and Social Services, there were, again, payroll liability costs that came in at the year end, and some third-party funding agreements, amortization expenses, and some asset disposals. And then the Department of Legislative Assembly was a smaller amount of $180,000, resulting from a pension adjustment and some unexpected legal fees. And then the Department of Municipal and Community Affairs was $6,000. So again, as I mentioned, departments do their best to forecast, and at times at year end, there are adjustments that can be unexpected or come in higher than anticipated, and these qualified for a deemed appropriation at year end. Thank you.
Thank you. Mr. Rogers?
Yeah, and like I said, as I noted, we did have supplemental appropriations where we did approve the 27 million. It was the additional amount that was not approved, and as noted by the OAG, that likely would be better served to have those come through, get approved up front before we actually go ahead and go through and do those. If I may, and I know this is kind of a maybe a little more of a political question, but certainly you do provide advice. And given the state right now, and we'll as you see as we get into more questions into the detail of the report, but I mean, we are looking at a Health and Social Services Department that's at a $300 million deficit now, which we know is 50% more than it was 5 years ago. We have the Power Corporation, which without our support, I think would be at a $47 million deficit. We know that over 70% of our revenue comes from transfer payments. We also know that we have what could be a very serious economic situation happening now with mine closures, with the potential to lose some of our population and certainly lose some of that the resource royalty revenue. So from a, speaking of our fiscal responsibility policy, which I know you would certainly advise or not be involved with, how do you see going forward? Is it time now to maybe look at that fiscal responsibility policy based on the economic outlook? We could be, dare I say, looking at an austerity budget coming up here in February, depending how things go. Is Comptroller General able to maybe provide some high-level comments on that, and what kind of recommendations will be coming out of her office, for how we look at our fiscal responsibility going forward? Thank you, Mr. Chair.
Ms. Mujcin?
Thank you, Mr. Chair, and thank you for the question. Really, my role is to ensure that the public accounts are complete, they're accurate, that the timeliness is there, so that when we're thinking about future spending decisions and we're looking at our fiscal policy, these financial statements serve as the basis for those discussions, and so I'm not really able to comment on some of those questions, but what I can say is that we do include in the public accounts a section in our financial statement discussion analysis section that includes our financial indicators. It also includes some commentary on, looking forward and some risks and uncertainty that is important for a reader to consider when looking at these financial statements. Thank you.
Thank you. Mr. Rogers, anything further?
No, Mr. Chair, I'll defer to another member.
Thank you. We'll now go to Mr. McNeely.
Thank you. Thank you, Mr. Chair. My question is on the P3 treatment of the Stanton. The committee has repeatedly recommended that the Stanton Hospital and the Stanton Legacy Project be reported together as a P3. The OAG has also made this recommendation through the audit of the Stanton Renewal Project, although the GNWT has disagreed. Can the CG provide details as to how accounting standards are applied and interpreted in such a way that result in the renewal of the legacy building not being reported as a P3? Thank you, Mr. Chairman.
Mr. O.
Sure, thank you, Mr. Chair. What we do is we review the accounting standards regularly to see how the information, particularly in this case, how the contract terms do match up with the accounting standards. And we evaluate to see whether or not in substance it meets the requirements as indicated. And what we identified in fiscal year 2025, which was we went back and revisited the question of should it or should not be reported as a P3. And our conclusion remained the same, which is taking in substance, taking a look at particularly with regards to was there a risk transfer from the government to a contractor that is common under a P3 agreement. Did that take place? And our conclusion remained that that risk transfer did not take place. And we had evaluated the contract to see from when it originated to when it, because it went into service in fiscal year 2025, did that risk get transferred? And our conclusion remained that it didn't. And as a result, we keep our conclusion that reporting it as a P3 is not necessary in the public accounts, and all of the information relating to those that is required under public sector standard is provided in the public accounts as currently is. Thank you.
Thank you, Mr. McNeely.
Thank you, Mr. Chair, and thanks for that response. My next question, can the Comptroller General provide more details on the 11 million that is reported for capital lease obligations in the PA? Thank you.
Mr. O.
Sure, thank you, Mr. Chair. So the capital lease obligation that is reported in the public accounts this year, there was an increase. Again, we went back and looked at the contract relating to Legacy Stanton, and what we identified there was that the contractor had made some investments and had made some purchases, the benefit of which accrues entirely to the government within the Northwest Territories throughout the lifetime of the project. As a result, when we evaluated, we said that does meet the definition of a capital lease, and we should be reporting it as a capital lease. And therefore, we added it as a new item as a capital lease in the public accounts. Thank you.
Thank you, Mr. O. Mr. McNeely.
Yeah, my additional question is, we go through these public accounts yearly like any other private enterprise would. How often throughout the fiscal year does your office meet with each department? Do you have quarterly assessment, quarterly discussions, or every 6 months to meet the budget, the design at the beginning of the year for, say, the Department of MACA, for example, just to see that their accounting is being reported, and if they're meeting their targets, and if there is any entertainment for a supplementary appropriation? Thank you.
Thank you, Mr. McNeely. Ms. Mujcin.
Thank you, Mr. Chair. So my team meets quite often with departments to discuss any accounting matters, operational matters related to accounting. And then as we get closer to the year end, we spend quite a bit of time discussing the year end process, what reporting we'll be looking for, if there's any sort of area of particular interest we have, or if there are changes, but really focused on the reporting of the actuals and not really getting into the budget and variances which sit outside of my shop. But certainly heading into year end, we look for areas where, we can provide additional assistance or add more clarity into the year end manual type thing. And then as throughout the year-end process, there's a lot of communication back and forth as the year-end submissions are completed. Thank you.
Thank you, Ms. Mujcin and Mr. McNeely. I'll have to put you back on the schedule, as that's been 5 minutes. But I did want to follow up on something, your line of questioning with the Auditor General. Mr. Irving, can you comment on the application of the accounting standards on P3s with respect to the Stanton renewal? I know this is both a complicated project, but we have a full performance audit, and your office has repeatedly recommended the project be treated a certain way in the public accounts. So if you could speak to why you're of that opinion, Mr. Irving.
Thank you, Mr. Chair. From our perspective, it's simple. There's 3 main criteria to record this as a P3. 1, are you involved in the design and build of the project? The private developer was. 2, are you providing finance past the date that the building becomes operational? That's true as well. And then 3rd, when it comes to, are you going to be involved with ongoing running or maintenance throughout the life of the project? And that occurred as well. So from our perspective, it hit all 3 criteria. And the fact that there is $6.2 million being recorded to increase the liability this year that should have been recorded in past years, this is an area with this project that requires close monitoring. Thank you.
Thank you, Mr. Irving. And just for absolute certainty with in terms of transparency, even though it's not kind of booked as one project, all of the expenditures are being reported in the public accounts, just in different places. So, is that accurate statement, Mr. Irving?
Thank you, Mr. Chair. Yes, our recommendation is for the liability to be recorded amongst the liabilities for private partnerships. However, the Comptroller General has recorded this exact same liability under capital lease obligations. So the liability is included in your financial statements, so that is correct. In addition, all the contractual obligations are also recorded in that contractual obligation note. The difference is which line it would be reported in that note. Thank you.
Thank you, Mr. Irving. Ms. Kaptana?
Thank you, Mr. Chair. I have a question here, and it's related to municipal and community affairs, as reported in the public accounts. With MACA, and MACA is so important, especially in small community, because much of the funding for our municipal operations is through municipal and community affairs. And we see that community operations under MACA had a total appropriation for capital funding formula of 73.66 million, including supplementary appropriations, but then lapsed $57.8 million. Can the Comptroller General provide us more details on what capital funding formula is for and how infrastructure contributions to community governments works in terms of budgeting? Thank you, Mr. Chair.
Thank you, Ms. Kaptana. Ms. Mujcin?
Thank you, Mr. Chair. I'll start and then I'll hand it over to Mr. Rowe. So in terms of budgets, I can't speak to that, but what I can speak to is that the variance here related to funding, that was not spent within the year. It is a multi-year agreement, and so the funds are able to be spent in future years, but it primarily related to ISIP funding and related to capital expenditure plans, and I'll hand it to Mr. Rowe for additional detail. Thank you.
Mr. Rowe?
Thank you, Mr. Chair. Yes, as the Comptroller General noted, this does relate to a particular project. In addition, what we see with the project is it is a flow-through arrangement that comes from the Government of Canada and is then allocated to municipalities based on the funding proposals that the municipalities put forward. In order for the department to have a path forward, they do need the appropriation, and so they ask for the appropriation and the estimates. And then they work with the communities to see what proposals will be advanced first to the committee that meets with the Government of Northwest Territories. And of course, then that has to be communicated back to the federal government and get their approval to proceed with that project. That does add quite a bit of timelines to the back and forth that gets needed. And as a result, we do see that MACA does have some instances and regularly where they need to roll forward that funding because the projects and the proposals have not advanced as much during the fiscal year. But it can be carried forward into the futures because these are multi-year programs that do extend quite a bit into the future. Thank you, Mr. Chair.
Ms. Kaptana?
Yeah, thank you for that, and thank you to the Comptroller General's office for the information. And you talked about communities being front-loaded to provide flexibility to communities. In terms of capturing this information in the public accounts, would the Comptroller General consider making any changes to reporting in the public accounts so that this money is not shown as a lapse in funding, but is more accurate representation of how the funds are dispersed? So they're waiting on communities to move forward on projects that have been approved by both MACA and the federal government. And many of these projects are multi-year projects. So how can we accurately represent that in the public account so it's not shown as lapsed funding? Because $57 million is a lot of money. Thank you, Mr. Chair.
Thank you, Ms. Kaptana. Ms. Mujcin?
Thank you, Mr. Chair. So the way we report the actuals versus the revised estimates in the public accounts is based on where the commitment had already been made and it meets the public sector accounting standards. And so therefore we show this variance because those funds are not committed in terms of being able to adequately equal an accrual for the year end, or it's not cash that's been paid, or whatnot. There are certain criteria in order to account for this under the actuals column. And so what we see here is a variance because those commitments had not been made at March 31. And then therefore, in section 2 of the public accounts, you can see departments, their expenditures broken down by activities in such a way. One of the things we are considering is adding some very high-level commentary to section 2 in order to explain a department's overall variance. But in terms of how the actuals and budget work, they're based on accounting standards and they're reflected that way. Thank you.
Thank you. Ms. Quintana?
Thank you, Mr. Chair. I'm done for now. Thank you.
Thank you. We'll now move to Mr. Morse.
Thank you, Mr. Chair. The first questions I wanted to ask were a bit more information about environmental liabilities as reported in the consolidated financial statements. The first question is whether the Comptroller General can provide additional details on any notable remediation that occurred over the past year that changed the balance sheet for the total amount of environmental liabilities, if any at all. Thanks.
Thank you. Ms. Mujcin?
Thank you, Mr. Chair. Note 12 of the public accounts has some more detail on environmental liabilities, and it's split out by category. And what we include here are, what the opening liability was, whether there were any new sites, the remediation expenses that occurred, and any sort of change in the estimate, as there can be changes at year end. And then it leaves you with a closing balance, and we also describe some of the sites that have closed and some of the reasons for that. In addition to what's in the public accounts, we also have a public-facing dashboard where anybody can go on and see locations of environmental liabilities and some more information on specific sites. And the amount of remediation expenditures that took place during 24-25 are $3.1 million. Thank you.
Mr. Morse?
Okay, thank you. Appreciate that information. I note that last year committee asked the Comptroller General to add information in the public accounts indicating how long an environmental liability has been on the books with a corresponding summary of the known information about sites in the notes and discussion session. I think the CG committed to review that information and provide additional detail in the financial statement discussion and analysis section. Is that work for the 2024 or 25-26? Is that work on track? And has that change been made as committed to committee?
Ms. Mujcin?
Thank you, Mr. Chair. We did accept that recommendation from committee to add some additional information into the FSD&A. We're still reviewing that information. We weren't able to incorporate that into the 24-25 public accounts given the time of that recommendation and where we were at with the year end for these statements, but it certainly is of interest to committee, and we're looking to how we can put that information in 25-26 statements. Thank you.
Thank you. Mr. Morse?
Okay, thank you. And lastly, is there a reason why more information can't be made public about the details about the list of sites that is included in the public accounts?
Ms. Mujcin?
Thank you, Mr. Chair. As I mentioned several years ago, it was committee's recommendation to look at so previously to committee's recommendation, we published a list by community of sites, and committee's recommendation was to find a more user-friendly way to display that data. So we worked with the Office of the Chief Information Officer to build this public-facing dashboard. It's a map view. It's very interactive and very user-friendly way to look at the different environmental liabilities. And it includes all the sites. It includes the type of contamination, the location, and quite a bit of detail on each site. So that's what we've done to provide some more information to the public. Thank you.
Thank you, Mr. Morse. Anything further?
I mean, I have questions on another topic, but I don't know if we're taking turns on that one.
Go for it. You got 2 minutes left.
Okay, thank you. Sorry, I wasn't aware we were doing timed. My next questions are about the tobacco settlement. I understand that GNWT has received roughly $185 million share of a tobacco settlement, of which $47 million came in this year and is listed as general revenue. Can the Comptroller General provide more details about the settlement, its impact on revenues, and the expected recovery for the remaining amount of the money after the $47 million is accounted for?
Ms. Mujcin.
Thank you, Mr. Chair. So the GNWT has recorded $83.7 million in revenue related to the tobacco settlement, and that is that has been recorded in the Consolidated Revenue Fund. And in addition to the revenue, the GNWT incurred around $5.7 million in legal fees related to that settlement. Thank you.
Thank you. And can you tell us where that revenue sits currently, like in terms of is it has been appropriated, or is it sitting in general revenue? Just the destination of that money, Ms. Mujcin.
Thank you, Mr. Chair. It is sitting in Consolidated Revenue Fund. Thank you.
Thank you, Mr. Reid.
Thank you, Mr. Chair. My question for the Comptroller General is around the disaster financial assistance. It does not seem to be a line item in the public accounts. Can the CG provide committee with information regarding how much of DFFA expenditures were made during the fiscal year? Thank you, Mr. Chair.
Ms. Mujcin.
Thank you, Mr. Chair. So for 2024, there were $2.6 million in expenditures related to disasters. The expenditures can be across multiple departments, as well as the revenue related to that, but the amount recorded for expenditures was $2.6 million. Thank you.
Ms. Reid.
Thank you. So the total amount of claims that resulted in revenues to the GNWT is $2.6 million. Thank you, Mr. Chair.
Ms. Mujcin.
Thank you, Mr. Chair. No, the expenditures were $2.6 million. And as I understand it, 2.4 of that's related to DFAA, but I will ask Mr. O to confirm that. Thank you.
Mr. O.
Sure, thank you, Mr. Chair. That is correct, yes. For fiscal year, it is 2.4 that was reported to us. Thank you.
Ms. Reid.
Thank you, Mr. Chair. So what is the process for recording accruals related to natural disaster recoveries and expenses? And in your estimation, are there areas for improvement? Thank you, Mr. Chair.
Mr. O.
Thank you, Mr. Chair. The accruals, I think we're talking about the expense side, but it happens on both the expense and the revenue, and they are interrelated. The way it works is for every dollar that the GNWT does spend on the disaster program, the department evaluates whether or not it meets the criteria of the DFAA. And if it does meet the criteria of the DFAA, and if we have paid in cash to the suppliers, because that is a condition that's critical in the DFAA, then we're allowed, per accounting standards, to record a corresponding revenue. And so there is that extra layer of where we do have to look at not only have we expensed it, have we incurred the expense, but have we actually made a disbursement relating to that expense, and then that books the accruals. In terms of are there improvements that can be made, yes, there is continuous improvement that we that we work with the departments to make improvements on, particularly as it relates to the timing of the data. One of the challenges that we all face is, of course, that when we go to prepare the report, we need to make confirmations, and of course, that means that we sometimes need to get a hold of external parties, other governments, other agencies, and so forth. And so then there is a bit of a timing. So one of the things we've identified and we are aware of is to make sure that there is a continuous communication with those agencies and parties, and to try to get that information faster so that the public accounts information can then be reflected faster as well. Thank you, Mr. Chair.
Thank you, Mr. O. Ms. Reed.
Thank you for that, and thank you, Mr. Chair. Just following up with the OAG, I'm curious if they have any observations that they have made regarding the GNWT's reporting of natural disaster recovery and expenses in the public accounts. Thank you, Mr. Chair.
Mr. Irving.
Thank you, Mr. Chair. Yes, this is an area of focus because this, for the most part, is a transaction transactions that occur not in the normal process. And what I mean by that is tracking these things is a challenging process. We have made recommendations to the government to improve their process for recording these accruals, because the cutoff on this is an area that we have found some adjustments were needed. The government did agree to make those adjustments, but this is an area that we do believe that can be improved. Thank you.
Thank you. Ms. Reed?
Thank you very much for that, Mr. Chair. Switching topics, I have another question for the CG. I'm interested in issues around net debt, and I'm curious if the CG could talk about if they see any risk in the government continuing operations with a high level of short-term borrowing. Thank you, Mr. Chair.
Thank you, Ms. Reed. Ms. Mujcin.
Thank you, Mr. Chair. When it comes to these public accounts, we do report an increase in short-term loans. I'm not really able to speak to future reporting or future levels, but we just ensure that these public accounts include the data regarding short-term debt, as well as the interest costs incurred. Because one of the things with short-term debt is we do have to pay interest on that amount, and so the fiscal responsibility policy, looks at all of the interest that the GNWT is paying to ensure it's sustainable, so that it doesn't take away from programs and services. Thank you.
Mr. McNeely?
Thank you, Mr. Chair. I'm going to add another question to my colleagues, Ms. Reed, on the disaster financial assistance. You had mentioned that are there areas to improve for improvement? Yes. We in the Sahtu encountered this natural disaster, which was very costly, in particular defining eligibility and getting compensation from the federal government so we can take away from the financial burden on the retailer. And a couple of excuse me, a couple of examples are the airplanes that were fighting the fires around Fort Good Hope, for example, here, they weren't eligible for compensation as a natural disaster, but yet it depleted the reserves. And when resupply came in at that additional cost, it was ultimately passed on to the customer. So that didn't qualify. So if you're saying room for improvements, maybe we can use that as an example on policy reform and have some discussions with our federal counterparts that would make these retail prices not to exceed what they were. At one point last year, homeowners were paying over $5 a liter. And you look at retail here, just by the gas station, you're down to like 139. So the variance of paying for your home would probably exceed filling up that tank in excess of 1/3 your payroll income. So to avoid that, I'm going to ask you if you can come back with maybe a briefing on the room for improvements for federal eligibility. And another example was the barging. If you got no water, you got no barge. But yet, when Fort Det'anchogh had to fly fuel in because the barge couldn't get there, the department said, no, you don't qualify, so you got to pay retail on the cost of delivery, and that was flying in fuel. So those are just a couple of examples that would give us room for improvements and maybe eligibility reform. So I guess my question to you, will you look into that and provide a briefing to committee? Thank you.
Thank you, Mr. McGill. I'll absolutely allow you to respond, but maybe clarify what you meant by improvements, because you're certainly not expected to be responsible for federal policy or even departmental policy outside of your scope. So with that understanding, I'll allow you to respond, Ms. Mujcin.
Thank you, Mr. Chair. Yes, we pay careful attention to what is considered an eligible expenditure to ensure that the public accounts adequately reflect the revenues expected to be received from the federal government. In terms of improvements for reporting on disaster, it's more along the lines of the accounting for those expenditures, especially given how large these numbers have been. And as Mr. Irving mentioned, they are different than the normal course of business. So they do, require some additional attention paid to them. And we've looked at some different, methods to collecting that information. And as Mr. O mentioned, there's also, the timing considerations and getting these confirmations back from other jurisdictions for whom we may owe money as a result of some of these disasters. So it is really ensuring that we're aware of what the policies are and that we have ensured that these public accounts have reflected all the revenues and expenditures associated with those disasters. Thank you.
Thank you, Mr. McNeely.
Thank you, Mr. Chair, and thanks for that reply and information. And if you look at the private sector and they're encountering their year-end audit and so on, like we do here, and if the operator, the department could save money here by your journal entries, I would expect that your office is providing the operator with some suggestions at year-end, and then saying, in savings, if you do a policy reform, it could save you millions in this case. So kind of like the after experience of expense money and maybe how to do it better with utilization of our federal counterpart resources, which are there to address these natural disasters. So it's going to be an ongoing thing. We're going to see fires regardless what anybody says. We're experiencing holdover fires, zombie fires. We've never seen that before. So those are just signs, and the depleting water levels on our barge dependency communities. So, if you look at the Satu, for example, the only affordable retail access is the winter road, and that's deteriorating every year. So how are we going to resupply that? If we go by air, I don't think I want to experience that retail price again. So anyways, that's just a supplementary comment. But my next question is measurement and uncertainty. There are a number of areas in the public accounts that are subject to significant measurement uncertainty, and thus mean that projections and forecasts are not always what is presented in the budget. Can the Comptroller General provide more information on measurement uncertainty, how it impacts the public accounts, and the specific areas reported that fluctuate most from measurement uncertainties. Thank you, Mr. Chair.
Thank you. We'll go to Ms. Mujcin.
Thank you, Mr. Chair. In our notes in section 2A, we do have a section on measurement uncertainty, where we describe the different areas in the public accounts that are, maybe based on estimates. If we take environmental liabilities listed here, it's based on what we know today. It's based on our best cost estimate. It's based on our best studies. But, in the future, there's some assumptions made about what those costs will be, and those can change over time. And so we disclose that here. Same with asset retirement obligations. It's based on our best information, what we know the cost to be, what we understand the retirement obligation to be, and those are based on some assumptions. So we describe in this note areas where you can see in the public accounts, they are based on some estimates, including things like even accounts payable. A contractor does work. You haven't received the invoice yet, but it's based on your best estimate of the hours and the cost, and you get your accrual at year end. So those are the kinds of things you'll see in the public accounts where there's some assumptions made for those amounts. Thank you.
Thank you. I'll also ask Mr. Irving to comment just on, Mr. Ross on the uncertainty and what you audit the books you've done for some time now. If you can comment on the trends you see with respect to that, Mr. Ross.
Thank you, Mr. Chair. Yeah, I would echo the Comptroller General's comments with regards to measurement and uncertainty and the necessity of preparing estimates as part of the financial statements. In order to prepare the financial, the public accounts at year end, measurement and measurement uncertainty is inherent in preparing the financial statements. In preparing these estimates, it requires the application of judgment and assumptions, particularly with regards to timing and amounts. And so in the public accounts, on the note 2A, as the Comptroller General identified, there are areas that perhaps result in more significant measurement uncertainty than others, and those are environmental liabilities and asset retirement obligations. And in those two cases, the estimate uncertainty involved is particularly around engineering estimates. How much is it going to require to clean up those sites or the related tangible capital asset? And this year, something a little bit new, but somewhat different, is the tobacco settlement, where management was required to make some significant judgments and estimates with regards to the timing and amounts of the future profits of tobacco companies, which is obviously a bit unique for a public sector entity such as the GNWT. Thank you, Mr. Chair.
Thank you, Mr. Ross. Mr. Morse.
Thank you, the auditor. I couldn't have picked a more perfect segue into my next set of questions. I wanted to follow up on the tobacco settlement a bit more from my previous line of questions. So does the government have a policy for what to do with windfall revenue like this when a payment comes in that we may not have expected? I'll just add a bit more information to the question to give it an idea of where I'm going with this. I noted in the news that Alberta put their upfront amount, so they, similarly to the NWT, received an upfront amount and also have kind of future payments that are going to be coming in. They put the upfront amount in their Heritage Fund. Have we considered what we're going to do with this money? Is it just going to be rolled into general revenues and spent without accountability for where it's going, or is it going to go to a specific place? And have they considered a Heritage Fund payment similar to what Alberta's done with theirs?
Thank you, Mr. Morse. And as we heard, it is sitting currently in the Consolidated Revenue Fund, but Ms. Mujcin, if there's any policy that you're aware of?
Thank you, Mr. Chair. No, I'm not aware. It is in the Consolidated Revenue Fund, and therefore, like other revenues, in order to expend monies from the Consolidated Revenue Fund, it goes through the appropriation process. Thank you.
Mr. Morse.
Okay. So I guess that's a no on the Heritage Fund. They haven't considered that. And I guess I was wondering because I mean, I'm trying to figure out, are they planning on spending it on health? Like most governments have done something with it related to either tobacco. I was noting the Alberta one because it was a bit unique. Governments have used the money for health promotion, tobacco consumption prevention, et cetera. So I'm getting the impression that there is no plan for the money right now.
Ms. Mujcin.
Thank you, Mr. Chair. No, I just want to clarify that I'm not aware of a plan, not that there isn't a plan. Thank you.
Thank you. Mr. Morse?
Okay, thank you. Somewhat related to this, I'm going to move to revenues, actuals versus budget. I note that in the reporting, there was a 35% drop in tobacco and vaping products related tax. Can the Comptroller General share any information about why that occurred?
Ms. Mujcin.
Thank you, Mr. Chair. It's difficult to say with certainty because the budget amounts are really a high-level estimate. When we do look at statistics, NWT, we can see that there are reduced smoking rates. Now, whether that correlates exactly to these figures, again, the budget amounts are a really high-level estimate. Thank you.
Mr. Morse?
Okay, thank you. Similarly, along this thread, I note that the cannabis tax brought in 79% more revenue than expected. Any explanation for that?
Ms. Mujcin.
Thank you, Mr. Chair. Yes, again, the revenues were higher than budget. The budget is a high-level estimate. I don't have any, specific reasons why that amount is higher. It may be that we need to go back and have a look at that budget level based on prior year actuals, but at that moment, it's, I don't have anything specific for that. Thank you.
Mr. Morse?
Okay, thank you. What was responsible for the 122% investment income loss?
Ms. Mujcin.
Thank you, Mr. Chair. We did note that during the year, one of our portfolios had a net loss, and that was reported in that line item, which made it, which created the large difference. Thank you.
Mr. Morse?
Okay, thank you. That's all I have for this moment.
Thank you, Mr. Morse. I will now turn to, sorry, actually, one follow-up on that point. When you see the actuals differ substantially, like you have a large variance between, 100, in excess of 100% either way, does that get kind of, do you work with the Treasury to inform future estimates of that there's likely to be a change because we're seeing trends in the actuals? Ms. Mujcin?
Mr. Chair, yes, Management Board Secretariat rely on these public accounts when they're looking at their future revenue amounts. And as well, we look at, budget amounts. We mostly look from actuals to actuals to see if that variance makes sense to ensure the statements are complete. But when it comes to that budget versus actual, Management Board Secretariat does look at the public accounts amounts when reviewing budgets. Thank you.
Thank you. Mr. Rogers?
Thank you, Mr. Chair. I'll just continue on briefly on actuals versus budget and get back into debt. But looking at, can the Comptroller General explain what other programs and services besides the MTS, as we know, contributed to the 140% overspend by infrastructure?
Ms. Mujcin?
Thank you, Mr. Chair. When looking at Section 2 of the public accounts, it includes the revised estimates. And so the Department of Infrastructure received supplementary appropriations that brought their revised estimates up to $416 million. So they ended up with a small, a 4% positive variance based on their revised actuals. Thank you.
Mr. Rogers?
Thank you. I'm just Going to move back into Mr. Chair, if you bear with me. So the territorial debt cushion now is at is now the federal government has raised the debt ceiling to 3.1 billion. Is our territorial debt cushion still at 120 million? And if so, how does that compare with other jurisdictions? Thank you, Mr. Chair.
Ms. Mujcin.
Yes, I'm aware that the cushion is still 120 million. The fiscal responsibility policy for which that cushion is a target, so we measure in the public accounts how we did against the targets set in the fiscal responsibility policy, but we're not the ones who develop the policy, so I can't speak today to whether they're looking to make any changes to that cushion. I know when they look at the fiscal responsibility policy, they do take into consideration, jurisdictional scans of that nature. Thank you.
Mr. Rogers.
Thank you, Mr. Chair. So has the department then costed the impact of higher interest rates potentially? What that impact would be, for example, the risk of higher interest rates pushing the debt servicing payments above the 5% of revenues and then in violation of our fiscal responsibility policy? Thank you.
Ms. Mujcin.
Thank you, Mr. Chair. Yes, we have done some work. So right now, the fiscal responsibility policy says that we can't exceed 5% of revenue for debt servicing costs. And so the team has looked at what would interest rates need to be based on our current, projection of debt to exceed that 5%. And they're considerably higher than what the current interest rates are now. So it's something we do keep our eye on in terms of when we're looking at our budgets for short-term interest and what those might be. Thank you.
Thank you, Mr. Rogers.
Thank you, Mr. Chair. Flipping over to assets for a minute. And note that our accounts receivable went up close to $90 million from 120.9 to 208 million. Can the Comptroller General explain what's responsible for such a huge change in value in our AR?
Ms. Mujcin.
Thank you, Mr. Chair. Yes, the difference is primarily related to the tobacco settlement. So the settlement occurred in March of 2025, which is why these statements include the amounts, but we didn't actually receive the cash until much later. So we have booked an accounts receivable amount here now for the amount of the settlement. Thank you.
Mr. Rogers.
So that makes up, I think, for 37 million, if I'm not correct? 37, 47? Or the entire amount?
We'll go back to the Comptroller.
Thank you,
Ms.
Ms.
Mujcin.
Thank you, Mr. Chair. Yes, sorry, I wasn't clear there. The difference is for the full amount we expect to receive, which we recorded as revenue. That was the 83.7 million. Thank you.
Mr. Rogers.
Thank you. So fiscal health, so in previous years, the government had provided an opinion on the sustainability, vulnerability, and flexibility of the GNWT. And why haven't we included that? Why isn't that opinion provided anymore? Thank you, Mr. Chair.
Ms. Mujcin.
Thank you, Mr. Chair. In the financial statement discussion and analysis section of the public accounts, we include some commentary here on the indicators of financial condition. So we have a couple pages describing sustainability, vulnerability, and flexibility. And then additionally, further into the FSDNA, there's some risks and uncertainties section listed. But yes, we have some information in the FSDNA on financial condition. Thank you.
Thank you. I'll now go to Ms. Reed.
Thank you, Mr. Chair. I will, continue where Mr. Rogers was going with some fiscal health questions. Can the CG please explain why the GNWT's net debt increased in a year when annual surplus was reported? Thank you, Mr. Chair.
Ms. Mujcin.
Thank you, Mr. Chair. So the net debt is made up of the difference between our liabilities and our financial assets. So even though we had a surplus in the year, the increase for tangible capital assets increased our liabilities, and therefore the net debt increased. Thank you.
Ms. Reed.
Thank you, Mr. Chair. So I believe we touched on this a little bit earlier, but I just, for my own clarity, what are the costs for debt servicing? What is the current ratio of debt servicing costs to revenues? Thank you, Mr. Chair.
Ms. Mujcin.
Thank you, Mr. Chair. In the financial statement discussion analysis section, we do report on the metrics for the fiscal responsibility policy to report on whether we were compliant or not. And that is on page 35. And there we report that the debt servicing payments as a percentage of revenue are 2.45 for 2025. Thank you.
Ms. Reed.
Thank you. And I think, yeah, Mr. Rogers was talking about some of that, yes, earlier, so I'll let that go. What does the increasing ratio of net debt to GDP indicate for fiscal sustainability? Thank you, Mr. Chair.
Ms. Mujcin.
Thank you. I will hand that one to Mr. O. Thank you.
Mr. O.
Thank you, Mr. Chair. If I could ask for a repeat of the question, if you don't mind.
Yes, you may. Ms. Reed, go ahead.
Certainly, I'm sorry if I'm not enunciating loudly enough. What does the increasing ratio of net debt to GDP indicate for fiscal sustainability? Thank you.
Mr. O.
Thank you, Mr. Chair. Generally speaking, the net debt as a percentage of GDP does have a negative relationship, of course. If you increase it, that does indicate that you are burning through a significant amount of government resources to finance debt. And so what we're mindful of is, and the fiscal policy, the reason for the fiscal responsibility policy is to put some guidelines around how far or how much you should be spending. Because again, the net debt increasing is one of the items that is in there is how much you are spending and financing and servicing that debt. And so if we see it continuously increasing, yes, we do have to take note that that does then start to deal with the use of the resources on debt servicing versus programs and services. And so an increasing of the net debt ratio would be an indication that we want to stay within the guidelines set up by the fiscal responsibility policy. Thank you, Mr. Chair.
Ms. Reed.
Thank you. And I realize that this next question might walk the line of perhaps what the Comptroller General is comfortable answering, and if so, that's totally fine, but I'm going to ask anyhow. Does the recent raise of the debt ceiling indicate that the fiscal responsibility should be analyzed, should possibly change, and if so, if any change, should be made? Thank you.
Ms. Mujcin.
Thank you, Mr. Chair. You know, the purpose of the fiscal responsibility policy is to ensure we have a responsible amount of debt. So no, I don't think that the change in the overall territorial borrowing limit changes the overall principles of that policy. Certainly, maybe the cushion that was spoken about earlier, that amount of 120 million, maybe maybe that could change, but principally speaking, the policy stands as it is regardless of that limit. Thank you.
Ms. Reed.
Yeah, thank you. No, and that's perfectly fine. I often say the government is not a business. Mr. Rogers and I disagree on this point. I think debt is a good thing for governments to have. I think that going into debt for crucially needed infrastructure is a good thing. More of a comment than a question, and I'll cede my time. Thanks, Mr. Chair.
Thank you. You'd be surprised. I think Mr. Rogers is a complex creature. We were having a discussion around this beforehand, but I'll let you speak for yourself, perhaps. Just moving to some questions that the committee was interested in. How are we seeing the effects of inflation, tariffs, and other pressures on capital development represented in the public accounts? Ms. Mujcin.
Thank you, Mr. Chair. So I think where you'll see that is in the actuals, and that's what we've reported here. Certainly, there are other places across the public accounts, you're going to see impacts of inflation. When we look at our liability amounts and our estimates for, future cleanups or asset retirement obligations, all of these sort of things are taken into consideration, and to ensure those assumptions meet the test for these public accounts. But yeah, certainly I think you'll see, if cost of goods or building materials increases, you're going to then see that reflected in the actual spend for capital projects. Thank you.
Is there, and this is, I guess, a question for both sides of the table, but is there a way to clearly indicate that to the public as a way to because we're hearing this a lot, and it is on the mind of a lot of Northerners. So is there a way, either in the discussion and analysis piece, where you could say, like, this is a quantifiable amount of cost pressures due to these factors, or somewhere else in the public accounts, I guess. Ms. Mujcin, and then we'll go to Mr. Irving.
Thank you, Mr. Chair. I think when it comes to making some assumptions on liabilities like contaminated sites or asset retirement obligations, it might be a bit easier to do that. But then when you look at actual expenditures and you look at the price of, let's go back to building materials, it would almost be like on an invoice by invoice basis, supplies for the hospital and things like that. I think it would be difficult. We would probably have to look at, at a high level what that number might be, rather than really getting into every different program area. Thank you.
Mr. Irving?
Thank you, Mr. Chair. It's a very interesting question because, as Ms. Mujcin says, trying to describe all the cost increases are all due to this inflation, you can hide a lot when you're looking at things globally. If you pick certain metrics, you could consider whether or not you wanted to include that in your FSD&A. It wouldn't belong in your audited financial statements, but it is a matter of perspective, because you don't want every department to say, well, we exceeded our appropriations because inflation went up. It's a challenge trying to narrow in as to what are you trying to specifically describe. So there's certain things that you can describe. The price of fuel was one of the ones in the different communities. That's something that you see, and it can be regional based, but you can see those things. But it really depends on what the committee believes is more beneficial to the public to include in that FSDA, to describe to the government as what recommendations you might have on that. But it is a challenging concept to factor in what inflation have impacted every single line item, as the Comptroller General said.
Thank you. Thank you for that. No, it's a complicated question, and I think that maybe that's a macro level analysis piece of things like that. But it would be useful to know so we can track it to indicate to the public, like when we say inflationary costs, it's not just a kind of a political statement, but it actually has some teeth behind it. So maybe we'll brainstorm some more ideas. To the timeliness of reporting of the public accounts, we have I think we're all on the same page that we'd like to see more progress, that we're like to see the public accounts come out earlier. Obviously, as it's you're consolidating other entities, it's not all up to you, but certainly we have statutory deadlines for a reason. And the NWT is among the last in Canada to publish its public accounts. I think we're tied, all three territories are quite late in the game on that. Can you comment on the things that impact our ability to do the timely publication from your perspective? And then we'll hear from the auditor, Ms. Mujcin.
Yeah, thank you, Mr. Chair. We definitely year over year try to ensure we're making improvements in our timeliness. We know that that's important. We know it's important for these statements to be done so that committee can use them to make future spending decisions. So we work with the boards, agencies, and departments to see where year over year we can make some improvements. And of course, we work with the OAG to ensure, that lines up with their expectations as well. We certainly have some larger entities like Housing NWT, Prosper NWT that they have to consolidate in a number of other entities to get to their consolidated statement. So that takes time. So we just continue to work with entities to ensure we can get them as soon as possible. We have seen the Health Authority make large gains in their timeliness. which we're very pleased with. And so we just continue to work to see how we can, bring that date closer in. We'd all like to see them done a little bit sooner, so we just continue to make as many improvements as we can year over year. Thank you.
Mr. Irving?
Thank you, Mr. Chair. First off, thank you to this committee and to the Comptroller General. I will admit that this is the first year that every single audit in the territory that we did, the management of those corporations expressed a desire and willingness to move things up. So that's the first time we've seen that. So that's progress. Two, there is work that needs to be done to improve the processes to make it more timely. Right now, the resources are set up to ensure that those territorial corporations are meeting their statutory deadline with extension, and it takes time to move things up. Quality control review is important in those entities, but it is a process when you only prepare your financial statements once a year, and that's a special task on top of all your other duties, that we encourage the concept, of course, preparing financial information on a more timely basis, whether that's semi-annually, whether it's quarterly, to get used to the process. But as the Comptroller General said, there are certain entities like Housing Corporation that does consolidate 23 ALHOs, and those audits need to be done before the audit of Housing NWT can be completed. But we've even seen a little progress in that area as well. So we're pleased to see that NTHSA has moved it up. They finished August 13th this year, which is well in advance of the August 28th. We are stressing the need for organizations to try and do this on a systematic basis, try and move it up 2 weeks, try and hit realistic deadlines, but also work on those processes, work on those intercompany reconciliations to ensure that things are more timely. If you do some of those reconciliations throughout the year, when you get to year end, it's not nearly as complex. Thank you, Mr. Chair.
Thank you, Mr. Irving. Is there an opportunity to, can you recommend a reasonable earlier timeline for the release of the public accounts, like based on the environment we're working in? Is there an opportunity to move it ahead a couple weeks, a month, days? Like what can you advise at this time? Granted, there's still a lot of work to be done. Ms. Mujcin?
Yeah, thank you, Mr. Chair. As you mentioned, the statements can be complex some years where we have new accounting standards, and those can sometimes take a little bit longer. So it's difficult to say with exact certainty, forever what that date should be. Certainly, we, as Mr. Irving mentioned, we're trying to look at weeks improvement. See how we can have the statements done in October. And in a year or so time, we have new accounting standards to implement, which are fairly significant. So we'll have to reassess that date then. But we're making efforts to see how we can bring these up at least a few weeks, bring them into October, and start there. Thank you.
Thank you. Mr. Morse?
Thank you, Mr. Chair. Just thinking of some more questions. Coming back to the tobacco settlement that came in, I'm curious to ask the CG or the OAG, whoever wants to provide an answer, perhaps both. How often do I'm going to describe them as windfalls. I'm sure that's not how accountants describe them, but how often do these kind of unexpected revenues hit the books of the GNWT? Is this something that happens often, or is it a very rare occurrence? I'm just curious, and to give a bit of context why I'm asking is I mentioned earlier asked earlier whether we have a policy on such windfalls of cash coming in. And I'm curious if that's something you've seen, if governments have policies for unexpected revenues, and how often that is, and whether a policy would be advisable depending on how often it is. I mean, I can see if it's something that only happens once every 10 years, it maybe is just something that's dealt with as a one-off, but if it happens frequently, I'd be curious to hear your thoughts on it. Thanks.
Sorry, Mr. Morse, who was that intended for?
Whoever would like to answer it.
Okay, Ms. Mujcin.
Thank you, Mr. Chair. I can start by saying that these are not regular occurrences. This was a very complex transaction that required a lot of time to look at, to understand the agreement and what the future revenue streams were looking like. So no, it hasn't been my experience that these type of payments are normal or expected. And the Financial Administration Act, requires these funds go into the Consolidated Revenue Fund unless, of course, they're specified for another purpose. But, these are not the regular transactions. Thank you.
Mr. Irving, did you have not to put you on the spot? No? Okay.
Your discretion.
Okay, go ahead.
Thank you, Mr. Chair. I agree with the Comptroller General. It is a rare occurrence. I mean, if we're talking about, as described here as windfall, it doesn't happen on a very regular basis. As you're maybe aware, when you're taking a look at federal elections, that's often a time when there are new announcements, but that's not what we're talking about here. We're not talking transfer payments. We're talking a settlement agreement. So I agree. It's an unexpected amount that it isn't anticipated, though it took years to get to that point. Thank you.
Mr. Morris.
Okay, thank you. That's all I had. I was just curious about that one item and getting a bit more background on it. Thanks.
Thank you. Anything further from, yep, Mr. Rogers.
Thank you, Mr. Chair. Just a quick one. I have to follow up with my colleague, Ms. Reid, of course, being the perceived capitalist that I am. But certainly I've seen very few governments that have bored its way into prosperity, and I know that, as like Winston Churchill had said, it's like standing in a bucket and trying to pick it up. But having said that, I do note that our short-term loans grew, and I'll caveat that, Mr. Chair, to say you can borrow to invest in something that's going to provide us some revenue, and that's a whole different kettle of fish. But borrowing just to build infrastructure continuously, eventually, obviously, we're going to see some fiscal problems. Short-term loans grew from $613.2 million to $763 million, an increase of $149.8 million, which is like 24%. That was to meet operational needs and capital expenditures. And can the oh my gosh, I just lost my Controller General, sorry. Can Controller General kind of speak what does this or may mean for the long-term fiscal outlook? Thank you, Mr. Chair.
Ms. Mujcin.
Thank you, Mr. Chair. So the number reported in the public accounts is the balance at March 31st. And so we use short-term debt to help with our cash flow throughout the year. So at the beginning of the year, when we're front-end loaded by the federal government with the territorial transfer payments, we tend to borrow less, and then as the year goes on, we borrow more. So it's not necessarily that it was at that amount throughout the entire year, so I just wanted to clarify that. But definitely, when we borrow, we do incur interest, as I mentioned before, and so that amount, it costs more to borrow more, so those are things to consider into the future. What level of debt, and then the cost of that debt, and that's really why the fiscal responsibility policy has the target of 5%. It's really to keep an eye on what that amount is in the future. Thank you.
Mr. Rogers.
Thank you, Mr. Chair. So is it safe to say that there is, or what is the risk to government in continuing operations with this high level of short-term borrowing? Thank you, Mr. Chair.
Ms. Mujcin.
Thank you, Mr. Chair. The risk with borrowing, is, risk of interest rates increasing over time would be one area of risk for having an amount of debt. And short-term debt is not a locked-in interest rate, so it depends on the interest rate of the day. So that would be one area of risk related to short-term borrowing. Thank you.
Mr. Rogers.
Thank you, Mr. Chair, and if I may, maybe I'll switch over to the NTHSSA. I can start, and some colleagues I would like to have questions as well. Questions likely potentially for the OAG and the Controller General, and I'll start by, and I know, as I mentioned earlier, we have I think 300 million now is the deficit in our NTHSSA. I know there is a state sustainability plan being worked on for that. Can maybe, both the OAG and the Controller General talk about, or has the OAG worked with or been consulted by the government on this system sustainability plan? Thank you, Mr. Chair.
Mujcin?
Oh, sorry, Mr. Chair, I think the question was referred to the OAG.
Both, actually.
Oh, that's it.
The question just specifically was have you been consulted on the on the NTHSSA sustainability plan?
Thank you, Mr. Chair. Earlier on, before the sustainability unit was stood up, was definitely involved in, providing information and work with the sustainability discussions. But as a unit, I know they work really closely with their CFO of the Health Authority. And the data being provided is through that office. So I haven't directly been involved in that sustainability unit's work, but we definitely support. Likely they have reached out to some members of my team for information, but I know they receive most of their information from the Health Authority. And maybe I'll just check if Mr. O has anything to add to that. Thank you.
Mr. O?
Thank you, Mr. Chair. As the Comptroller General mentioned, yes, they did have a couple of touch points with some of our team members. In particular, they had some questions surrounding some of the prior financial statements and just getting an understanding of just a quick walkthrough to make sure that they understood what those numbers represented. And we walked them through our understanding of it and our interpretations of it and so forth. So that was the extent of the consultations. Thank you.
Thank you. Mr. Irving, same question. Oh, Mr. Ross, same question.
Thank you, Mr. Chair. So the work of the sustainability unit is something that we're aware of as the auditors of the public accounts and of the NTHSSA, but it's not something that we're necessarily directly involved in as auditors. But we are, very, like I said, very aware and very hopeful of the work that's being performed, and without necessarily evaluating the work that they have done, we might just comment that the test of the effectiveness of the plans that are being carried out will be determined by changing results in the years to come. Thank you, Mr. Chair.
Thank you. In previous audits, there's been an emphasis of, a matter? This is one of the terms you're more familiar with than I am, but there's been an emphasis placed on NTHSSA's fiscal sustainability. Is the OAG still of the opinion that there should be an emphasis placed on NTHSSA's fiscal stability and the overall picture of financial health for the GNWT? Mr. Irving.
Thank you, Mr. Chair. When it comes to NTHSA, they have significant deficits, as previously mentioned. We have provided recommendations to them in the past about identifying all the programs, what's funded, what's not funded. They have done the sustainability plan. They are economically dependent on the government of Northwest Territories, and that has been highlighted in the notes to those financial statements. Thank you.
Thank you. Mr. Rogers, seeing no one else, I'll give you another block of time. Go ahead.
Thank you, Mr. Chair, and certainly I can defer to other colleagues as well, but if the OAG could please provide detail, their observation that there are many areas of internal controls needed improvement in NTHSSA. Can the Auditor General comment on that, please, Mr. Chair? Thank you.
Mr. Ross.
Thank you, Mr. Chair. We have noted an improvement in the internal controls of NTHSSA over time during the years that we have, in particular during the years where we have been the auditor of the new consolidated NTHSSA entity. Thank you, Mr. Chair.
Mr. Irving.
Thank you. I think what we'd highlight here is there's been stability in the finance department over the last few years, and that has made a significant difference. What the member's referring to is, yes, back, what was the?
21.
Yeah, it was 21. 2021, we had highlighted significant deficiencies. And then when new management came in, they went through all the significant deficiencies that we had identified in our management letter, and they worked through addressing all those. So there has been an improvement in those internal controls. But to be fair, when NTHSA was first formed, there was significant turnover in the finance department for a few years, and that didn't cause us concerns. So it has been improving from that perspective. Thank you, Mr. Chair.
Ms. Rogers, you good? No. Okay, I'm not seeing any more questions. So what I'm going to suggest is that we conclude the public portion of our meeting here, but I think we should be mindful to all of our witnesses that we may be calling you back as we deliberate on recommendations and potentially will require other information, but I'll allow each of our guests to have closing statements if they so choose. We'll start with Ms. Mujcin.
Thank you, Mr. Chair. I really appreciate the time we get to spend with committee going through the public accounts. They're very important documents and we work very hard to prepare them. And then just really thank you to not just my team, but the teams across the government reporting entity, as I mentioned. It's quite a lot of work to prepare these accurate information, timely information for our teams. And so I just really appreciate the work that they all do. Thank you.
Thank you, Ms. Irving.
Thank you, Mr. Chair. Similarly, I do want to appreciate the time. We really appreciate having the in-camera session, this public hearing to discuss the public accounts. We do want to express our appreciation to the Comptroller General's office. We have a good working relationship, which allows us to work through some of these complex issues throughout the audit. Thank you.
Thank you. Thank you. And yes, and that's a very good point about the time and care that's put into the public accounts. It takes 6,000 hours to audit them, so I can only imagine it's thousands of hours to produce them as well. So this is a significant amount of work, and you know, maybe it's the best part of the holiday season to talk about public accounts, at least for some people. So with that, I will thank our witnesses for coming today, thank committee members for their attention to detail, and thank our non-committee members for attending as well. And that concludes the public portion of this hearing. Thank you.